How concerning is that to you? The Russell, which doesn't tend to be the case, seems to be leading the overall market today.
Yeah, thanks for having us.
Driven by what's happening in the financials.
Yeah, so we have been kind of solely positioned, Scott, within our financial holdings, within the big banks, the Canadian banks, broker-dealers, and asset managers. We've avoided the regional banks for some of the reasons and some of the things that we're seeing right now, especially with net interest margins being squeezed. And clearly, Joe brought up a great point with respect to this could be some recession fears, but we're playing the longer-term theme of scale. And that's why we own those three industries within financials. And I'll remind you, too, of a couple things. Financials are getting bigger as of next Friday because you're having a lot of the payment companies leave technology and go into financials. So financials are going to be a bigger part of the market. Their growth rate's going up, but, oh, by the way, their multiples going up as well. We still view that financials are the value play in the market, and we believe value is going to be the discipline for the next 3 to 5 years. So we would be buying the weakness in the Bank of America's and JP Morgan's.
You know, I don't want to get off of the regional bank story. Guys, back in the control room, if you can give me the KRE, please, the regional bank ETF. I want to sort of zero in on that, which is hitting a new multi-year low back to February of 2021. So you're talking about a couple of years. It's down 6%. You overlay that on the S&P today, and you get a pretty good picture. The Russell, obviously, if you overlay that, you get a pretty good look, Amy, yep, in what's happening within the market. That some John Spallanzani, for example, emailing me, talking about the carnage that you're seeing in the financials today. What does it mean to you?
Well, in general, credit spreads, I mean, people are worried that credit spreads are going to go up, and they've been really well behaved, and we're starting to see some signs of that breaking and that cracking, and that's going to hurt the financials. But I think what Josh said at the beginning of the show is really, really important. I mean, we've raised rates by 475 bips in a year. And the Fed tried to normalize rates in 2018, and the market was down 20% in 6 months. I mean, we've had an incredible amount of rate rises, and the market's held in there, the economy's held in there, and I do think that we have to look at what that really means. And maybe it means that the markets and the economy is less rate sensitive than it used to be. So I think people are having the knee-jerk reaction with financials and worrying about credit spreads and worrying about a near-term recession, which I don't think is really in the cards. So it might be an opportunity.
Yeah, default risk,
hey, Judge,
perhaps in the market.
Judge?
Yeah, go ahead, Josh. Yeah.
I'm sorry. It's three banks that are driving what you're seeing in the regionals. So Silvergate, which effectively is now, I guess, going to be a zero, went all in crypto. Then throw up Signature Bank, SBNY, not all in crypto, crypto adjacent.
Looking at it right now,
which is bad enough. Okay.
Yeah, Signature's down near 8%. So we're going to show all these as you're talking. Go ahead.
Okay, this was a $345 stock. It's 94. This is not even an all-in crypto bank. They happen to have done a little bit of crypto banking, and at the end of last year, they told shareholders, we're out. And they've been deliberately winding down the exposure they have to crypto. At this point, it's very small. And then Silicon Valley Bank is the real story today, because this is not really crypto. This is the #1 bank levered to technology and startups, more specifically. And this thing is cratering SVB. That's what's going on. It's not, people aren't selling regional banks because they think all of a sudden there's a recession because jobless claims this week outperformed by 10,000 jobs. That's not the story. These are very specific banks with specific idiosyncratic problems, mostly to do with high multiple, high valuation, venture capital / crypto stuff. And listen, it's scary. And if you're a regional bank investor, you probably have exposure to one of these names. They're big name, maybe not Silvergate. The other two, these are important names in the group. So let's not turn this into all of a sudden there's a recession bet on. There's been a recession bet on. The market participants, global portfolio managers have been positioned for recession for 15 months now.
Yeah,
so
for sure.
This is really a very specific story.